Let's start with what we know, and I think at this point I know there's more unknowns than knowns. But when you look at the market reaction at this point, we're seeing a broad sell-off right across the board. What do you think?
Yeah, the reaction in the markets is not terribly surprising. Equities are in the red. Canadian dollar has fallen, although it has come back from its lows. It's made back about half of its losses overnight, down about 80 basis points. And the bond market, particularly in Canada, has rallied on the expectation of more cuts and a possibility of recession in Canada, and government bonds tend to rally in that news. So it's not a across-the-board negative story, candidly. Certain things have actually done okay, but the reaction is pretty much textbook. We're coming into a growth shock, and it's going to lead to really tepid, if not recessionary growth.
I think that, sorry, didn't mean to interrupt, but I said that there's a lot of volatility in the market. I remember the last time we spoke, when markets are near all-time highs, you talked about, we could see something that's going to see something bring it down. Is this that, I guess, is what I'm asking.
Yeah, unfortunately, we're going to be playing, headline roulette, if you will. It's not clear whether this is a cast in stone or this is a starting point. There'll be some meetings today between Ottawa and Washington, and it's also what is the objective, and that starts to think about part of this is raising money for the U.S.
from the U.S.
The U.S. Treasury, and also in terms of border security, and so we're not really sure about what the end game is, and so that's going to lead to a lot of intraday volatility. Really tough. You can get into a lot of trouble making kind of off the cuff calls right now. So we're pretty steady. We're happy with the way we're set up, and just kind of hunker down and work through this.
I think I'd like just to run through some of the asset classes, just to understand, your feelings on what's been happening, and I know things are going to change moment by moment. But let's start with currencies. We've seen the U.S. dollar surge right across the board, but also, and not surprisingly, the loonie come off a bit.
Yeah, the loonie was ultimately one of the first release valves for news like this. It's weakened materially on this news. Now it has come off the lows overnight. Overnight it was off almost 2%, down now maybe 1% as we're speaking. If you think about how this might play out, if this trade war continues, it's going to be really hard on the Canadian economy. Many were calling for a recession. Lower interest rates likely to see a weaker currency. So. More pressure to come on the Canadian dollar. It is inexpensive, so I don't know if we're probably at the latter parts of this Canadian dollar sell-off. Not so long ago was at 80 cents US. Now we're pushing through into the 60s, but it will continue to weaken as the headlines and the actual policy comes out. That's quite negative for the Canadian economy.
What about the equity side of things? I mean, we've seen sell-off some sectors more deeply than others. I mean, not surprisingly, the auto sector getting hit pretty hard this morning, but we're seeing it in different places as I think investors are trying to parse exactly how it can net out.
Yeah.
What are you seeing there?
Yeah, I mean, it's not across the board. Sectors that were expensive have come off. So tech has moved, not because it really is affected by this, it's just because it's liquid and it's kind of the first thing people want to sell. Industrials in Canada have been very weak. Bigger industrials in Canada actually a lot of them have big footprints in the U.S., and so they will probably shift production if need be. So I don't think the long term is as dire. It's really that small, medium-sized, company that might not be listed publicly that really is going to feel this because they don't have the diversification in their business portfolio. And Europe is also getting hit hard as well because of the presumption that they'll be next in terms of tariff threats. And so not a good day for equities, but on the year we're still up. And again, this is, all can change in the next few hours or next few days, depending on how these negotiations play out.
Bonds?
Oh, government bonds are rallying, particularly in Canada. 10 years dropped about 18 basis points. We had cut last week, where markets were expecting for maybe one or two more. Now we're pricing in 3 cuts. There's been some economists looking for a material cutting cycle in Canada. And so you'll see, strength in the Canadian bond market. Yields obviously dropping, so you're not going to earn as much income. But bonds have rallied quite well. And credit, interesting, with the weakness in equities, we really haven't seen much follow through in the corporate bond markets. Off of maybe a basis point in spread. Really nothing to see here. So the bond market, at least in the U.S., is not pricing any type of recessionary conditions. This is really an earnings and a margin story, which is much more negative for equities than corporate bonds.
And commodities, I expect. I mean, it depends, because with the U.S. dollar surging.
Broadly stronger, actually.
Interesting.
So again, macro, you get, sometimes you get a little lazy thinking about, well, the dollar's up there for, the world is changing, rapidly, and you can, all kinds of, whether deglobalization or changing of trade corridors or what have you. This is not a natural, it's not natural necessarily for, just because the dollar is stronger, to see a weaker commodity market. So commodities are stronger today. Oil is rallying on the news that Canadian oil will be tariffed. There are certain ags that are rallying, certain ones that are selling off. But I think, broadly speaking, if we are going away from a very efficient trading system, this is net inflationary and should put a boost in for commodities on a medium term.
Last question for you, and again, this is going to change hour by hour, but I've seen some reports of, expecting many more Bank of Canada cuts. I know market's pricing in more cuts coming as well. Central banks, how do you expect them to react to all of this?
Well, the Fed, I think, is going to just wait back and see and probably keep a low profile. They really don't want to just kind of let this play out and stay cool. Bank of Canada had talked about this last week as a risk. If we do see a prolonged tariff war, I would expect to see cuts out of the Bank of Canada, same out of the ECB as well. Again, if you have a prolonged tariff battle, that's really negative for growth. And as we readjust, we're going to need looser financial conditions to kind of retool and realign our trade flows. And so that's going to, with a higher degree of unemployment and that need for investment, would expect to see a lower overnight rate in the quarters to come.